Hello dear viewers, this is your host Rakesh Kumar. In the previous video we had seen the piercing pattern and a few examples of the piercing pattern. In this particular video we are going to see the new candlestick pattern. It is a 3 candlestick pattern and the name is the morning star pattern. Just to remind you that if you have not subscribed to our channel yet, you can do it now. It will give you notifications whenever we upload the new videos. And if you find this particular video useful for you, then don't forget to press the like button which is below the video. But before we begin, let us have a look at the risk disclaimer. It states that the futures, stocks and the options trading involve substantial amount of risk. Your capital is at risk, the losses can exceed the investment. The information is provided as is and the user of the information assumes the entire risk of any use it may make or permit to be made. So let's get started. Okay friends, to begin with, morning star pattern is the candlestick pattern that we are going to learn today. Now what is a morning star pattern? The morning star pattern is a characteristic 3 candlestick pattern actually, with the middle one forming the star. Okay, so we will go through the presentation one by one, and I am sure that it will help you in understanding how does it look like. So first thing that we need to know is that it's a bullish reversal pattern. That means it occurs at the end of a downtrend, a small downtrend or a larger downtrend. Second thing is that it is a 3 candle pattern, so 2 candles will not tell you everything about it. You need all the 3 candles to be exactly same as I'm going to tell you about. Now this pattern indicates a potential reversal from a downtrend to an upward trend. Oh, I'm sorry, I have covered already this in the first point. And only forecast about 5 days out. That means this reversal is approximately has less significance than the other patterns like bearish engulfing and bullish engulfing. So how does it look like? This is how it looks like. The morning star, I have told that it is a pattern with the middle one forming the star. So here in this case you can see that this middle one is forming the star, this one here. Now the first candle is the bearish candle, which is spotted on the first day of the morning star pattern, and the second one, which is following, is actually a small candlestick, small bodied candlesticks. And for the second day it may be a bullish or bearish candle, but finally the third candlestick is the bullish one, and it closes in the body of this one or above this one, first one. Now important thing to note here is that if there is a gap down opening from the first day, then it is considered that the bears were totally in control of the market and they were ready to sell at any price, so they opened lower. But even after opening lower, they could not close lower than the low of the previous day. And on the other hand, the next day the price opened and it did not make any low here and kept on going upwards and actually closed into the body of the first candle. Now this is how you identify a morning star pattern. This means now buying is in force and it can take some time for bears to enter the market again. Now the strength of the pattern can be gauged from the size of the candlesticks. When a big bearish candlestick is formed on the first day as a part of a downtrend, of course, the representation illustrates the control of the bears. After this, a gap down indicates that while the bears are still controlling the market, they are not able to lower the prices any further. Hence, their strength seems to be diminishing. Now, if there is a bullish candlestick on the second day, the weakness of the bears is clearly manifested. Finally, The long bullish candle on the third day confirms the strong bullish force, and this is accompanied by a gap up most of the time. But in this particular example, I have not shown. In this particular example, it is not there at gap opening, but most of the time it is accompanied by a gap up, and the completion of this pattern initiates a reversal and a buy signal. Now, judging the strength of the morning star pattern involves checking for signs that indicate a flip over in the market sentiment. Now, in this case, it refers to a change in sentiment from bearish to bullish. The nature of the first candle confirms that sellers push down prices to a new low point at the open and close of the candle, while the middle candle can be dark or light. Now it depends. Okay, here in my example, you see this third example, this one is not dark candle, the middle candle. This morning star is green, but still it is signifying that the buying has started. Okay, the price is opened lower with a gap down, but actually the buying has started and it is now going to close higher, while the third candle is gap up opening and closing into the body of the first candle, which is again positive. While the middle candle can be, I said, a dark or light, its body size does matter. A short body with long lower and upper shadows refers to a strong buying sentiment, which causes a tentative reversal. Now the final decision rests on the third candle, which is also called the recovery candle. Now this one is called recovery candle. The third candlestick is always bullish. It marks the beginning of the turnaround of events and sustained bullish trend. So you see there is a sustained bullish trend after that. Now talking about the reliability of this pattern, when the third candlestick pattern candlestick open over and above the body of the star candle, like this one in this particular example, and a gap exists between the body of the star and that of the third candlestick, like here there is a gap, then the pattern is considered more reliable. You see here there were 1 2 3 4 5 6 7 days of positive price movement in this one. However, this situation is not witnessed more frequently. Most of the time you see that the bodies are overlapping each other, but if you get this scenario, this is somewhat near to the ideal scenario where you will have a buying pressure after the pattern is confirmed. Now another important measure of reliability is how far the body of the third candlestick pierces into the body of the first one. Now you see here there is a long black candle, but here this one, this green candle, I think it is closing above the middle of the this red candle. Now this is something like a piercing candle also. You remember, if you remember from the last video, we had discussed the piercing pattern. In that there were only two candles. Now here this doji or this small morning star, it is giving us another confirmation that now selling pressure has exhausted. Now buyers are in control of the market and they are able to erase the losses of the previous day. Now even if you're talking about the stock market, when the volume of the first candlestick is below average and the volume of the third one is above the established average, the reliability is enhanced much further. Now similar to any other stock trading pattern, the reliability of a morning star pattern can also be enhanced through the use of several other technical indicators such as RSI, stochastic, MACD, and you also can involve volumes in this one. Now given that the morning star candlestick pattern is a strong signal for a reversal, it is central to the trading strategy of majority of investors. However, the pattern can be very tricky when it is not used correctly. So you have to use it correctly. It is important to understand that traders have dissimilar perceptions of a downtrend. Some think that this is a swing high, and if the pattern is price is going down, then it's a downtrend. Some even think that only if 3-4 candles are going down, then they think that it's a downtrend. So it depends from person to person. Okay, so forex traders understand that the morning star patterns are the variation of the bullish engulfing pattern, because for the forex traders, they don't get such gap ups and gap downs every day. So they look for the bullish engulfing. So most of the time when I'm trading currencies, I'm not looking for this pattern, but I just thought that to the Dukascopy members, this pattern may be important, because I'm not the only one who is trading in Dukascopy. There are other traders who are also trading here, and there are stocks and securities available. So you can trade this if you get this type of candlestick pattern. Now in a non-forex morning star pattern, the candle must be located at an isolated point with respect to the other two candles. But in a in a forex morning star pattern, I think you will be looking for a bullish engulfing only. Okay. One thing to note here is that trading correctly with the morning star pattern is dependent on identifying the context accurately. Once a downtrend is established, the Morningstar candlestick pattern can be traded with success and is very profitable. Now this pattern could be part of the main trading setup for many traders. For trading requires that the second candle is either bearish or doji, the third candlestick must be close to at least the top half of the first candlestick. That will be a very bullish signal. It can be larger so as to engulf the previous two candles or even more in the downtrend. So if this candle would have closed somewhere here or maybe here, then it would have been more positive. So now I hope that you will be able to identify this pattern if it emerges in the stock market or in any other market. This is how it looks like. My friends, if you have any questions, you can write them in the comment section. I will be very happy to answer those questions. In the next video, I will be giving you live examples from the market, from where we can say we will see these patterns emerging in the market and see what stop losses we need to do for them and how can we trade them in the real market. Thank you very much for watching.